Welcome to the last segment of tonight's installment of First Issues, where we discuss bonds with senior trader at the Rand Merchant Bank, Bagang Mabisi. With how life has become generally expensive, now is probably the right time to look into ways of diversifying your portfolio to generate more income. Some people choose to start small businesses that require very little capital injection. Others will look into high yield savings, while others may look to invest in what is called bonds. Simply put, bonds are loans that an entity makes to a government agency, or a corporation so that they could finance certain projects and other needs. The bond issuer, herein known as a government agency or corporation, agrees to repay the entity at a fixed interest rate by a specified date. However, like anything you put your money into, you want a good return on your investment. This means thorough research into what this investment vehicle is and how it will work for you. We have invited Bagang Mabisi, senior trader at Rand Merchant Bank, to speak specifically about these financial tools over a series of subject matters pertinent to understanding bonds. In these subsequent weeks, we'll be discussing the performance of the bond market, then how to invest in bonds, and then lastly, the economics around bonds. In this conversation, however, Bagang talks us through the basics of bonds, a beginner's guide. Bagang, thank you so much for coming on First Issues and affording us your time. Today we're talking about bonds. Before we get into that, though, we want to talk about the basics of bonds, a beginner's guide, if you will. So, what are bonds in the simplest of terms?
In the simplest of terms, I could give you an example. So you as Bonataho come to me and you're like, I need a bit of cash. I need to build my house. I need to resuscitate my business. What then can you do for me? Can you help me with a bit of cash? I'd go, yes, of course. I can give you 100,000 pula for argument's sake. So you would then write an IOU to me, as in, you owe me. And then I'd give you the 100,000 pula. But over the life of the debt, each and every or half yearly, you would then pay me interest. In a bond terminology, you would say it's a coupon. So, and at the end of the debt, or at the maturity of the bond, you would then return that 100,000 pula to me, which is the nominal amount. So now in jargon terms, or in textbook terms, a bond is a security investment whereby a company or a government borrows money from an individual or from the market and then returns it with interest over the life of the bond. And then at the end, upon maturity, they give back the principal or what the individual or market had invested.
Like any other investment vehicle, I assume that bonds have types. So if that's the case, please take us through the various types that exist with bonds.
In bonds, it's pretty much the same. So what you have in bonds, or the vanilla bonds that we'll be talking about today, you have corporate bonds and government bonds, which is what we as FNB offer here today. So the corporate bonds are really, bonds that are issued by companies, either to raise capital for their projects, etc. And then you have government bonds, which are issued by the government of Botswana, issued in the market. And these are considered as risk-free or less riskier than the corporate bonds. Because, you have the full backing and the full faith and the credit of the Botswana government. So these are pretty much really low risk as compared to the corporate bonds.
I want you to talk us through in much more detail about the government bonds, right? And what it means when FNB is now a primary dealer of government bonds.
So what would happen is that obviously you would either buy a government bond if you were interested. So then you would invest a principal amount. And then from there, on a half-yearly basis, you would then get what you call a coupon or an interest rate, an interest payment from that. So that happens on a half-yearly basis. And at the maturity or at the end of the life of the bond, you would then get back your principal, having gotten coupon payments on a half-yearly basis during the life of the bond. Being a primary dealer, there are 5 primary dealers in the Botswana bond market. And we as FNB are one of the 5 primary dealers, or have been mandated by the central bank to trade securities on behalf of them. So what that simply means is that we buy bonds or government bonds from the Central Bank of Botswana or from the government, and we are the only ones mandated to deal with the central bank. And then from there, we disperse them or sell and buy them to the broader market, creating a government bond market or a local bond market, if you were to say.
This program was brought to you in association with First National Bank of Botswana.